All right, guys and gals, back to work tonight. One more day left here in this holiday shortened week. It's Thursday evening already, July the 8th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trades for tomorrow. That's finally Friday's trading session. Got a great video in store for you guys tonight. Charts are all prepped in the background, as you can see. S&P's ready, Nasdaq is ready, and of course, the gold is ready and on our radar for tomorrow. Boy, speaking of tomorrow, it's a Friday morning, so window is a bit smaller, but boy, after the big moves we saw today, we might see some short covering rallies, some short squeezes tomorrow. We might see more legs lower tomorrow. We might see some kind of choppy ranges on a Friday morning. So boy, lots of different scenarios to cover, and I got some great trades on my radar for tomorrow. Got some trades on gold, Nasdaq, and the Emini. By the time we're done this video tonight, you'll know my favorite trades to finish up the week here in the green tomorrow. You'll also notice some of the stuff to avoid tomorrow, right? To keep yourself out of trouble, whether you're trading on your own or you're trading with us tomorrow morning in our trade room. Now, before we jump into the video tonight, as always, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video every evening, my best trade ideas for the following day. I don't want you to miss, not tomorrow night's, but next week's video newsletter. So don't forget to subscribe, hit that little bell icon when you do, so you always get notified every time we upload something new. And as always, I love to answer your questions. If you have any questions, drop those questions for me in the comments section. I'd love to answer all your questions. And I really appreciate you guys tuning in every evening. If you enjoy this video as much as I enjoy making it for you guys every evening, hit that like button, that thumbs up here for you if you guys enjoy the video here tonight on this YouTube channel. But enough of the intro though. Boy, time is ticking. Had a busy day here in the office. Sorry to keep you guys waiting for this newsletter. Let's get into those charts here this evening. Where do we go tomorrow? Boy, oh boy. I'll take a lot of really interesting charts here as we look into Friday's trading session. Of course, the S&P and the Nasdaq both had those big moves down into those trading ranges today. Now, those ranges below us, both in the Nasdaq and on the S&P, those ranges are going to act like magnets. So I've really got some nice short trades on my radar for tomorrow. And honestly, I think the best shorts on the S&P and the Nasdaq are going to be after a pop higher. I would love to see us pop and drop. I would also love to trade that rotation. I got some really good targets waiting here on the S&P and the Nasdaq. And I'll tell you, if there's one day where a short squeeze or a short covering rally is certainly potential, tomorrow definitely is it. We definitely have some bullish momentum on the S&P and the Nasdaq right now, and we'll see if the buyers can hold this together, but I'll tell you, if they can, there is a lot of upside potential here. I've got a couple reversal setups I'm watching, some short squeeze setups I'm watching for the S&P and the Nasdaq. So I'll tell you, no matter what we get, short side or the buy side, we've got some great opportunities for a Friday trading session. Gold seems to be the one that seems to be probably the most kind of put together here for tomorrow. Got that big pendulum swing, kind of swinging off the top of that range that we talked about in last night's newsletter. I'd love to get short on this gold right now, either shorting the pops or shorting the drops. We can definitely get short on this gold right now. As you can notice, though, there is one little trend line coming up. We've got kind of like a two-legged pullback right now on the gold. That trend line is going to be an important part of this. We'll talk about what it means for the buyers. We'll talk about what it means for the sellers. And of course, you know me, right? I'll make sure you're covered on some breakout scenarios, some reversals going long here on the gold as well. So like I said before, got a lot of great trades on our radar. By the end of this video, you'll know my favorite trades. You'll also know how to stay out of trouble tomorrow morning if you're trading on your own. Before we jump into these charts though, let's grab a look at the calendar for tomorrow so we all know we're on the same page here. Tomorrow is a Friday. It's not just your average Friday though. It is a summertime Friday, and it's a Friday after a holiday weekend. Now, I know you know what I'm feeling right now, right? We all come back after the holiday. We get our butts kicked, right? Monday to Tuesday or Tuesday, Wednesday, Thursday. Everything's really busy with the holiday shortened week. That oftentimes results in a relatively sleepy Friday morning, right? It's kind of the middle of the summer, so just kind of keep it in mind. We may see some low volume. We may see some of that tomorrow. It is a Friday. Fridays are always expected to be a smaller window of opportunity. And again, most people that were on vacation over the weekend, last weekend, they're coming back Tuesday, Wednesday, Thursday. We've had a fantastic week, but as you can see, right, I'm recording this video a little bit late here this afternoon. It's been a busy week in this office, and I know a lot of people probably had a pretty busy week as well. So we might see a little bit of that kind of sneaking into the markets tomorrow. We'll see what happens. But I'll tell you, though, with those big moves today, tomorrow could be a very busy day, right, with those short squeezes like I mentioned earlier. So I definitely wouldn't count out a very busy Friday just because of that big move down that we saw today in the equity markets. Now, of course, we don't have any major news on the schedule tomorrow. Generally speaking, whenever you don't have any major news on a Friday, you've really got to be thinking that kind of 10 o'clock to 11 o'clock block is probably where you're going to get the best opportunities tomorrow morning, either in our trade room or, of course, trading on your own here. So that 10 o'clock to 11 o'clock hour is definitely where I'll be. Well, let's put it this way. If you could only be at your desk for an hour tomorrow, that block of time between maybe 9:45 and 10:45 would definitely be something you're going to want to be in front of the screens tomorrow morning. Now, obviously, we'll be together tomorrow morning in the trade room, right? We are every morning at 8 o'clock Eastern time. We don't have any major news. Just remember, smaller window of opportunity. You got to have a really good reason to be trading after 11 o'clock on a Friday. Not to worry, we're going to be there tomorrow together in our trade room, 8 o'clock Eastern time. I would love to have you there, right there with me. I'll put the membership information you guys need to come out and join me every morning at the opening bell and trade this stuff right with me. I'll put that link for you guys in the description of the YouTube video. So grab that link, and I'll see you guys tomorrow morning and every morning, Monday through Friday, in our trade room. So no major news. We'll see what we get tomorrow. Again, Friday morning, early in, early out, smaller window. Again, I would anticipate tomorrow to be a little bit lower volume because it's summertime Friday and Monday being a holiday. But at the same time, though, you can definitely see once we jump into these charts tonight, you'll see why I think there's definitely potential for some fireworks tomorrow as well. S&P and the Nasdaq are pretty similar. Gold is kind of the oddball of the group. Why don't we kick this thing off here on the S&P 500? What do we know about the S&P today? Well, first of all, we know the market made that big bear move down into a trading range. And, anytime we see a big kind of a bloodbath move like this big move down overnight, we know that it's going to take a relatively deep pullback to attract enough sellers, right? No one's going to want to sell way down here. And so one of the things you'll notice is when a market makes these big drops overnight, the market will oftentimes chop around in a range until they can get that nice big pullback. And now the sellers can come in and say, oh, thank goodness, this is something I can get excited about. Because again, nobody wants to sell way down there, right? So it makes perfect sense that this market is pulling back here. Now, with that said, this trading range, of course, acts like a magnet, right? Ranges act like magnets. All of this overlapping candlesticks, flat moving average, all that volume consolidating right there. There's a big magnet down at that trading range. So strong move down, we get that big pullback. Perfectly logical, right? To get that big pullback to attract sellers into the market. Now those bears would love to not just retest those lows, but now you'll notice I've marked up the amount above, I've marked up the amount below, and you could definitely think the bears have a big target down at that 42.58, 42.60 area tomorrow, along with that low of day. Now, that seems easy enough, right? Just sell this thing back down as we go. But it's actually, there's a few more wrinkles in this. And one of the big wrinkles is this big, strong push higher. That strong push higher We call these open loops in our trade room. An open loop, by the way, is a strong move in one direction that has not retested, right? That is not retested. So it's a strong move up. They're going to want to retest that high, right? Anytime we see a strong move in one direction, they're going to want to, at the very least, retest that high, if not get another leg in the same direction. And that's exactly what the buyers are hoping for to spark that short squeeze, going pretty much right back to those all-time highs at that 43.52. So if I want to be a seller on this, I really would be smart for me to respect that momentum, wait for these buyers to basically retest those highs, and then look for the short coming back down in. That is one of my favorite trades on my radar for tomorrow. In addition to, obviously, the bull breakout, right? Going higher there. That bull breakout could definitely be something that really rewards us tomorrow as well. The challenging part, I think right now, I think the big kind of elephant in the room on the S&P and the Nasdaq for that matter is going to be this big trend line. Because as you can see, right, I can't exactly just get short on this thing right now. So what I'd like to do is get down underneath it and use it, right, as an area of resistance, ultimately using that support trend line as a level of resistance. And we're going to talk about this type of entry setup later on in this video on the gold, right? So make sure you stick around on the gold there as well. Now, another very interesting part about this chart, which you can notice I've got some numbers on here, 1 and 2 here. What is very interesting about this situation is that if you put yourself in the shoes of the sellers, if we have that strong run up, right? We pull back, the buyers try once, the buyers try twice. Now, if you're a client of mine, if you're a member of our trade room, you know how much we love those, what we call two-try failures. In fact, you can even put a little trend line on there up at that high. And the sellers had one of the best short setups you're ever going to see right there. You've got buyers trying once, buyers trying twice, a trap high, a hidden channel, a big old range down here acting like a juicy magnet. And what did they do with it? Nothing. They did nothing with it. Well, you can tell, right? They tried, but they got nowhere on it. That, to me, is one of the biggest clues on this chart because it basically, to me, confirms this trend line is not messing around. And this open loop move, right, is, again, it makes me think now these buyers have something up their sleeve here. Now, it may be a short covering rally. It might be a complete reversal, right? Maybe this is a buy the dip moment and we go all the way back up to those all-time highs. Or we may just simply take that move higher, double top that high, and dump this thing back down again. So that's kind of, as you can see, there's a lot to unpack on this. I think there's great trades on both sides of the market right now. What I would like to see is if the market goes higher here, there are kind of two things I'm looking for here as the market runs higher. As the market runs higher, I would love to get the high taken out, and I can definitely short that top. What I'll do, though, is I'll look for the buyers to try twice, try once, try twice, and then what I'll basically do is look to sell into the stop losses of those sellers. Now, what's nice about that short off the high is that it gives me plenty of open space there before we run into that trend line, right? Now, be aware, if we were to go up, take that high out, and then pull all the way back, the buyers try once, and then go lower, that's going to be a little bit of a story. On that situation, you're going to want that trap. So notice how these are the same basic short setup, right? One is up top with a 1, a 2, and again, stops are right below those lows, and we're shorting into those stops. We call these two-try failure patterns. Or if it happens to go up and we get one of these guys where it comes back quickly once, twice, just try to look for that trap, right? And that trap should be pretty reliable. If you really get lucky, you can draw that trend line off that low, trend line off that high, right? And short off of that high there. So as we go higher, I would love to get short off of these highs here. And again, target's going to be back down at those lows. and really back, really literally all the way down to that pendulum swing right here tomorrow. Now, as we go higher, how do we trade the breakout? The breakout is going to be the one we got to really wait for here, because as we go higher here, once they retest that high, it's anybody's game at that point. Right? The bears still have that magnet below them. So how do we buy this thing as it goes higher here? There's a couple ways you can do this. First of all, if the buyers can get a strong jump off of that moving average, if they can really get this thing to rip, that will be a successful, what we call 1, 2, 3 breakout pattern. And I can mark up that high, I can mark up that low. And what I'll do is I'll drill down and I'll buy the first pullback off the low of that channel. Now, I say drill down because you'll notice in the upper left-hand corner, this is a 6,000 tick chart here on the S&P 500. I'm not going to trade off that 6,000 tick chart. What I'll do is I'll drill down to a faster time frame, and what I'll do is I'll look for 2 price action setups. One is your typical failure pattern. The other one is called a trap setup, right? These are price action setups. Remember, I don't use indicators in my entry signals because indicators are all lagging in my experience, and I think I've probably test-driven hundreds of different entry signals with indicators over the years. In my experience, the best indicator for signals are the candlesticks, right? The actual candlestick, the price action on the chart. Now, I'm not going to go into the actual entry triggers in this video, but I do cover the entire strategy along with all the entry setups, the price action setups. I cover all of that in our quick start class. So if you're brand new here and you want to get kind of a shortcut to kind of get up to speed with the strategy we use, how we find levels of support and resistance, and most importantly, right, how we find our entry triggers in our trade room, I'll put a little button up top there for you for our little quick start class. Again, think of it like a shortcut class to quickly bring you up to speed, so the next time I say 1, 2, 3 breakout, you know exactly what time frames, what indicators, how to trigger the entries, right? Because you do want to get aggressive off that first pullback. Now, we may see this market rip. Let's be honest here. If there's one environment where a short squeeze is potential for tomorrow, this is it right here. We've got a strong move up. This thing could easily just rip and keep on running. So we may not get that pullback, right? We may not get that 1, 2, 3, and the market may not pull back, right? It may just keep on grinding. That's all right though. Grinding markets are pretty easy. If the market jumps and we see the market, instead of a nice deep pullback for us, it's shallow pullbacks and higher highs. Easy. Just grab that trap below that low. One of my favorite breakouts. And this is going to be a pattern you're going to be looking for tomorrow if this thing really starts to kind of grind higher here, right? If it really grinds higher there. And it's pretty simple. We have a strong move up, a shallow pullback, a higher high in price, and a trap right below that low. Now, where would our targets be going higher here? The weekend gap is nice, but let's face it, if this thing catches a short squeeze tomorrow, there's one thing on their radar, and that is that 52 3/4. I've got a bit of a resistance zone up here, so if I can grab that long, I'll be looking at taking a final target off right around that 43.50 area, just to kind of give myself a little bit of a padding there off of that all-time high. So got some really, I think some pretty easy setups here as we go higher. What if we go lower? If we go lower, the buyers have very little to work with if the market runs lower. We have that trend line coming in, right? That trend line coming in. What I would love if the trading gods are listening up there right now, what I would love to do is get a nice strong move lower and then get it to pull back and grab that trend line. What is always the hardest part about these trend lines, these kind of rising support trend lines, is you don't want the entry really quick, right? You don't want it really fast off that trend line. The ideal situation is we get this move going lower, we then pull back, and what usually happens is you'll go above the moving average like that, right? And what will happen is you'll get that, it'll be now resistance here, the buyers will come in and they'll try to buy that pullback and run it higher. That's exactly what you want to see. Let those buyers commit off the moving average. Their stops are sitting right below there, right that low. That's where their pain points are, and you can hit them right into those stop losses. This would be what I would hope for tomorrow as the market rolls lower, right? So, and again, don't be scared if it really pushes low, then pops up, right? Because you know they're going to want that trend line. Sellers are going to want to sell as high as they can. Let those buyers try to buy the pullback, find those stops, and hit them right where it hurts. I will also be looking for potentially a channel, marking up that low, marking up that high, right? See how I'm going with this? Finding that failure setup. And again, don't waste your time with indicators. I'll show you all the price action setups I like to use in that quick start class. It's free. It's right on the website. It'll bring you right up to speed so you can be trading just like we do every morning in our trade room. That's a great setup as we go lower. And then let's face it, right? Let's face it. I mean, this market may evaporate here tomorrow and try to really run down to that 58 area. That 58 area is a prior all-time high. It just happens to also be the pendulum swing area there as well. That is a very juicy target. Now, think about this. We talked about if the market rips higher, right? If it races higher on a short squeeze, we talked about how we can look for traps, right? To buy those traps going higher. Same thing goes as we go lower, right? Let's say, for example, we run lower. We don't get that pullback like I'm hoping we do, right? So we don't get that pullback we want. We run lower and the bears start grinding, right? They start grinding, right? That's the scenario now where you know what's up. Something's up. They want to grab. They're basically just collapsing down to that low. If that's the case, mark up that swing. And again, it'll usually be very shallow pullbacks there. Just grab those traps, right? Just grab those traps and grab those, basically a bull trap. Now, again, you can always find channels. Now, channels are not going to be required for this, but if I can draw a trend line down, up off that high and get a channel, even better, right? Even better. But again, I wouldn't worry about that channel. If we really run lower, we get that shallow pullback, right? That lower low. See, that shallow pullback doesn't give anybody a chance to get in. The lower low confirms the move, and that's where you get those traps, right, coming in here off of that low. That would be another one of my favorite trades for tomorrow. Again, looking at that pendulum swing target as we go here. Now, I'm sure there are a couple things I probably missed here on this video tonight. I can't cover everything, unfortunately, but I will make sure we are on all the details tomorrow morning in our trade room. So make sure you grab the link in the description and join me tomorrow. And again, grab that quick start class I mentioned in the upper right-hand corner. Let's keep going here. How about some Nasdaq? Now, Nasdaq is going to be very similar here to the S&P. We have that big drop down, that trading range. It's completely, it makes perfect sense the market would go sideways down here because, it's such a big, strong move down. Nobody wants to buy it, right? It's too bearish to buy, but it's too low to sell. And so the market just simply chops sideways. And it makes perfect sense the market would now pull back to attract more sellers, right? To let them sell at a higher price and now allow us to go back down to retest the low. A deep pullback makes perfect sense in this. But again, as we mentioned before, that deep pullback also, it basically gives the buyers all the momentum right now. All of that movement going higher here right now says these buyers are going to want to retest that high, and they definitely might do it off of that trend line. This trend line really poses an interesting opportunity here for the buyers right now because the buyers ultimately have a chance to buy off the trend line and, of course, right, buy that breakout going higher. You can see, of course, the Nasdaq also has a pretty easy job here if they can get this thing moving to retest those highs here tomorrow as well, right? So again, if there's one market that is really ripe for a short squeeze or a short covering rally, it is these E-minis, the S&P and the Nasdaq. So very similar to the S&P in the sense that I've got this strong bull run up. You know that those buyers are going to want to retest that high. And then once they get that retest of the high, I would love to get the buyers trying once, buyers trying twice, and then grab that short, right? Grab that short off those highs. Now, this is where you've got to kind of see this thing develop in real time, right? This is where unfortunately, I can't go over all the different details here just because I don't know how long it will take. But as you can imagine, right, if we go up and we retest this high here, right, if they take their time on this and go 1, go 2, right, I'm going to run right into that trend line. If we start dealing with that trend line, it's not the end of the world. You just want to make sure you grab a trap, right, above that high. So a trap here for that short does look like, just kind of based on what we're seeing here right now, that trap will probably be your best option. And then, of course, right, if it just simply goes up and drops like a rock, right, 1 try for the bulls, 2 try for the bulls, that trap will absolutely be required, right? So again, the idea here is the range below us, right, is a magnet, just like we talked about on the S&P 500, right? The range below us is a magnet. We have all of this momentum, though. So if they retest those highs, the buyers have all the control momentum. Let them try a couple times. Let them try once. Let them try twice. And again, we'll kind of play this by ear tomorrow, and we'll see how far away that trend line is. If the trend line's not that, if the trend line have us, give some good space there, what I can do is I can grab a trend line off the high and I can short that trend line. There's a lot of different ways you can take these 2-try failure setups off these major highs. It's just the only problem, of course, right? The problem here is if it goes up and stalls for a while, right? That's when you get a problem. Or if it goes up kind of V tops like this, that's where you want to look for that second try to trap high on this. And like I mentioned earlier, find that channel, right, and short off that channel top. One of the best setups we can possibly imagine there after we retest those highs. So a 2-try failure off that range high, going back down into that trading range. Also, much like the S&P here, if there's one situation that leads to a short squeeze, this is definitely it. We've got that strong move higher here already. So all we need is a strong run up. Right, let's say we see a strong rip higher, a shallow pullback to the moving average, a higher high in price. That's an easy trap entry to get in before we retest those all-time highs. So keep your eyes open for that breakout going higher here. If the market does jump but doesn't exactly spike higher, just watch the pullback and see if they hold it. If they hold that pullback with a 1, 2, 3 break higher here, that basically confirms this range is no longer important. The buyers, of course, now are looking for that first pullback. Remember, we're going to drill down to a faster time frame on this. This is a 4,000 tick chart on the Nasdaq. I'm not going to trade the 4,000 tick chart in the trade room tomorrow. We're going to look for that pullback on a much faster time frame. We'll drill down. And again, my kind of 3 favorite or 4 favorite price action setups will be traps, failures. Failures usually lead into pullbacks, and pullbacks often lead into strength moves. Now, again, I realize that terminology might be way over your head right now, especially if you're watching this video for the first time right now, which is exactly why we have our quick start course. I'll put a link up there for you in the upper right-hand corner, right? Grab that little circle icon up there, right, and grab the quick start class. That way you'll know what those price action setups look like, and you'll know the rules that we use in our trade room. So relatively similar there on the Nasdaq here as it was on the S&P. What if we go lower right now? As we go lower, can I buy this trend line? I definitely can, but there's going to be some challenge here, right? What's the challenge? The challenge, of course, is, well, the big challenge, if you ask me, is that the buyers have tried a couple times here, and the sellers have already had their chance, right? They've already had that chance here. So the sellers, of course, are trying to run this thing down. Long story short, if we do test that trend line here, the bears are going to be looking to get short back into that trend line. I'm going to want to, or back into that range. I'm going to want to wait for them now to try twice. Let them do their thing and then buy right into those stop losses. As you can see, I do respect the momentum or the range below us quite a bit when you get these big bear moves down overnight. So I definitely can buy it again off that trend line. I just want to make sure I respect those bears trying to short back in. Let them try once, let them try twice. Their stops are right above those highs, and once we get them committed, right, we can buy right into those stop losses. I've got my short-term target back to retest the high. Long-term target is that short squeeze back up to those all-time highs here. Now, just like the short side, if they were to bounce hard off of this, one try for the bears, two try for the bears, you want to think about a trap. Right? Traps are what you want to look for whenever you're worried about buying too high. In this situation, you'd be buying too high, right? If I can buy off the trend line, I'm buying relatively low. I can take a small amount of risk for a relatively large amount of reward. If I have the price bounce hard and go 1 and 2, see, I can't do that now. So I want that trap low. That trap low will really make it'll be really the only reliable setup if we get a strong bounce off of that low. So again, these two try failures are very common in our trade room. You'll learn a lot about those in that quick start trading class. So keep your eyes on that if we do pull back. At the same time, just like on the S&P, I would love to see us get underneath that trend line, come back and give it a good whack off that trend line. What I would like to see the most is again, you don't want to get too close on it. Those are usually not that effective. What you want to do is get well underneath it, get that moving average coming down, get that nice pop up into what now is resistance, get those buyers trying to buy off the moving average. I'm not a big fan of trying to short that pop. What I do is just, again, knowing those buyers have that big breakout higher, wait for those buyers to commit and then just hit them right into their stop losses. It's much easier. It's more reliable. You're not trying to time the top of it, pick a top of that move here. So a nice failure pattern, right, coming off that trend line as we go lower. And again, if we do happen to just puke, right, and run lower here, just like on the S&P, I've got that pendulum swing, right? The amount above the range, the amount below the range. Now we've got some major support down here, that 1480, right? 14,480 area. That's a major low. So I wouldn't be surprised here at all if we were to see, like, for example, right? Let's say, for example, the market tumbles hard. We get that shallow pullback, right? That lower low in price. The shallow pullback drives the sellers crazy. The lower low in price confirms the move. Once it pops back above that swing, everybody is going to pile on and sell into that. You can see an example from this earlier. Strong move down, shallow pullback, lower low in price. If it just peeks its head above that high, right, people are going to be shorting right above that high. Same pattern, right? Same pattern here. And also, too, keep in mind, too, we may see that run lower. We may get that pullback off the trend line, and we may jump, right? So we may get that short, right, off the underbelly of that trend line, and then we might get one of these 1, 2, 3 moves. Anytime I see a 1, 2, 3 move like that, mark up that low, mark up that high, and again, drill down, faster time frame now, and you always want that first pullback. Remember, I shouldn't say remember, we can sell that first pullback, right? Because again, that range rotation coming down, but this is the one that you really want to take out the aggressive entries on, right? If we get that 1, 2, 3 move, everybody's hip to the game now. We know where the momentum's going. It's trying to retake out those lows down there. So definitely excited for some price action entries off the top of that channel, right? Bull traps, buyer failures, seller pullbacks, right? As we go lower here, right? To retest those lows. So I think that's the big, those are my favorite trades for tomorrow. I should also mention too here, you'll notice the market is sitting right around the weekend gap right now. And this also goes for the S&P. If we were to start to see this thing go sideways here right now, right? If it would start to go sideways here, this does happen every once in a while where they'll make one range and then for whatever reason they just break out and make a new range. If that is the case, this becomes basically a bull market into a trading range. And what you want to do is, if it starts to sit there and go sideways for a while, again, I'm hoping for the best tomorrow, but tomorrow's a Friday. It's a summer Friday, and it's a Friday after a Monday holiday. So I'm just being realistic with you guys. It may be relatively quiet tomorrow, but what you want to think about is mark up these highs right there, right? Mark up those highs right there. In our trade room, we call that the edge of the trading range. And what you want to do is, again, bull market into a trading range. And again, this will also apply to the S&P as well. The same technique can be applied to the S&P here. If we do go sideways, that range now becomes the new magnet. And now we look for potentially a slingshot reversal. What I mean by that is we wait for the pullback. We wait for the bears to come in and try to get short, right, off the EMA. That tells us exactly where their stops are. And again, we're trying to buy off a support level underneath the range, right? We're basically combining an entry setup, right? A price action setup. In this case, it's called a failure setup off that support trend line. And then, of course, at the same time, these oftentimes will slingshot and run higher. When they do, that oftentimes will trigger that short squeeze. We see these a lot in our trade room. In fact, almost the entire month of June, this is exactly what kept happening. Right? We kept having these strong moves up into ranges. They would poke their heads below the range. The bears would get clobbered, right? And the buyers would buy in their stop losses. And then all of that momentum would push. And because the momentum was so bullish to begin with, it just slingshots higher, and you can grab that little trap right below that low here. I mean, I'll tell you, ranges aren't that fun sometimes, but I'll tell you, tomorrow, this could be some really good opportunities for us tomorrow if we come in tomorrow morning and the whole overnight session is just going sideways here. Again, this will also apply to the S&P as well, right? So definitely keep that on your radar for tomorrow. All right, Nasdaq looking pretty good. You ready for tomorrow on the Nasdaq? Hope you are. Again, maybe a nice short squeeze tomorrow, maybe a reversal, maybe a range tomorrow. We'll see what we get. All right, how about some gold here? By the way, how am I doing so far? You got any questions for me? Don't forget, drop those questions for me in the comments section. I hope by now you've hit the like button. I hope by now at least you subscribe to our YouTube channel. And don't forget, you can always share this video with a friend as well, too. I'd love that as well. What's going on here on the gold right now, though? Gold, of course, you can see we are still rotating back and forth on this trading range. Now, in last night's newsletter, right, we talked about the fact that we had that range. We talked about how if the market was to go up, right, we'd want to sell it back down again. And we talked about how we can measure the amount above the range and project that down on the opposite side, right? So ranges act like magnets, right? Ranges act like magnets. And, pretty much the big thing right now is we have what's called range rotation, right? So the market's rotating back around. They punch lower. They run higher. They run lower. Now, they're going to try to take out that low down here. I would imagine those bears, with all of that momentum, they're going to want to take out that low down there. We'll see if the buyers can pick up some slack here right now and try to make a run going higher here. I think the biggest variable on this right now, this trend line is interesting, but it's not that important. This trend line right here is the big one. That's the one we've got to kind of respect here right now as we either go higher or try to go lower. So what's the plan here right now? Well, if the buyers can take control of this, they've got that trend line to kind of keep the bears away. So that's the nice thing about this trend line for the buyers. If we can get this thing to pop higher here, all of a sudden, it looks pretty easy now for those buyers to retest that high because they've got that trend line right there, right? The bears can't get that aggressive into that trend line. If we go lower here, just like we talked about earlier, we're going to want to get underneath that trend line and go. Or we've got to get the breakdown, right? Take out those lows and possibly down to fill that range magnet that we talked about earlier on in the week here. Our biggest challenge in the gold is going to be simply stand in the middle of this trading range right now. That'll be our biggest challenge here on this gold. So the bears have control momentum. Right, the bears have control of the short-term momentum, which means I definitely want to be a seller right now. I am completely open-minded to it being a buyer, but I've got to see a little bit of a change in in direction, right? Change in momentum. So as the market runs higher here, I think the easier trade is the buy side. I do, just because of that trend line. Now, as we go higher, you definitely want to think about one of those traps, right? So two-try trap as we go higher here. That is definitely going to be on my radar for tomorrow. We don't need it off that trend line, but it sure as heck wouldn't hurt. It sure wouldn't hurt here. Strong move up, shallow pullback, higher high in price, trap low. Where's my target? Yep, back up to retest the high. And remember, this thing could go even higher and do it up here. So, don't be surprised if it kind of races a bit higher than that, right? And then gives you the trap. Just try to make sure you're getting into this thing before we retest those highs there at 18.19 for tomorrow. So as we go higher here, we call these two-try traps. One of my favorite kind of breakout or reversal price action setups. We cover all of these price action setups, by the way, again, in that quick start trading class in the upper right-hand corner, right? So grab that little shortcut class and learn these setups. As we go higher here, right? There's a couple different ways that I could sell this. One way to sell this would be we pop up, or let's say we do run all the way back to retest the high. If we go all the way back to retest the high, wait for those buyers to buy the pullback, and then look for the 1, the 2, and back down in, right? The 1, the 2, and then back down in. Remember, what will happen is the market will race up, that strong move up. They're going to want to buy that pullback, retest the high, right? Close the loop, as we always say. And then again, we drill down to a faster time frame. This is a 1500 tick chart. We drill down to a faster time frame, buyers once, buyers twice, and see ya back down into that trading range. So as we go higher, we may easily see that two-try trap, right? That gets us going higher. We take out that high, the buyers double top, and then it's 1, 2, back down into that trading range. That could easily be a short setup middle to late morning tomorrow on the gold. Another thing to keep in mind too is if we go higher here, a lot of this push higher here may just be to get away from that trend line. When we push higher here, now the buyers try once, the buyers try twice, and we get the trap on the other side now. Okay, this will probably be the most difficult trade to take because of that rising support trend line. So you want to make sure you give yourself plenty of room on that. What would be a lot easier is if the market goes up, comes down, and then allows us to grab that short, right? Basically the same thing we talked about on the S&P and the Nasdaq. That'll be a whole lot easier there. The one thing you want to think about on that short is you're going to want to make sure you grab that before we retest those lows. Get that big move down, right? The open loop is down there. So we're going to want to see this thing go underneath that trend line, come back up, right? And then again, use that support trend line as a resistance area target, of course, back down to retest that low, right? We've talked about this type of pattern here set up on this video quite a bit already, right? So I won't go into more details on that for this one. We covered on the S&P and the Nasdaq. So that's going to be an easy short, right? Going lower here. We may also see this thing hold that channel, right? Hold that channel and really dump. If it really dumps, this is where things can get pretty good, because we've been talking about this range magnet down below us here. If this thing really cruises lower here, I've got that strong move down, that shallow pullback, that lower low in price. I don't care if I'm at that low. I really don't. I don't care if I'm at that low, that pendulum swing. If we see enough momentum going lower, a shallow pullback, a lower low, that trap is still a very reliable setup. I'll probably do like a half-size position on that one tomorrow if we get this thing running lower. Again, remember, it doesn't really matter where you are. As long as you have good momentum and a good setup, you're most likely going to be okay. Nothing's ever perfect. We're not looking for perfect to make profit, so you're not going to see perfection. This is not going to be a 100% trade. Nothing is. But again, if I can get enough momentum, a good setup, I don't really care about where I am, right? I'll take that trade all day long as I have momentum and a good price action setup. Take that trade, right? So that'll be a good one as we go lower. Or, of course, maybe we see the market go running lower, right? They hold that pullback, they jump. What do we call that? We call that a 1, 2, 3 breakdown. Mark that low, mark that high. And again, don't be bashful, right? Short that top, drill down to a faster time frame. Again, this is a 1500 tick chart on the gold. Drill down to a faster time frame, and on your price action entries, that's a bull trap. It's a buyer failure, right? Failure into pullback combination. All the stuff we talk about in that quick start trading class linked up in the upper right hand corner. And again, we know where the market wants to go. We've got that 78.5 if this thing simply falls out of bed and makes a strong run lower. One thing you don't want to do is get caught in the middle, right? Trade in the middle here. If we do end up going sideways and kind of sticking here, if we do end up going sideways here and kind of hanging out inside that range, what I'll do is I'll measure that distance below, I'll measure that distance above, and that's going to create another level of support. Once that happens, what do? You wait for level of resistance. You wait for that pop up. You wait for these buyers to come in, right? Try to buy that pullback, and you short it. At that time, at that point, that trend line won't be in play anymore, right? So does that make sense, right? So if we end up going sideways inside this range, that basically confirms the bloodbath is over for the bears, at least for now. And that will tell us now, find the amount below, compare the above, find that level of resistance above, and combine those levels of resistance with those failure setups on a faster time frame. All right, guys. So got some really great setups here. I think the easiest trade, right? I think the easiest trade right now will be that strong run up, shallow pullback, right? Higher high, that trap on the way back to retest the high. I really do like this pop up. Buyers try once, buyers try twice, and that trap, that's going to be a little bit challenging, right? Just because you got that trend line coming in. Or do we pop, drop, and then pull back into that channel or that trend line? Again, that will be a good one, but that's going to be, again, it'll be a little bit tricky tomorrow because we're going to wait for it to pop back up. So we'll see what we get. Either way, though, again, I'm sure there's something here I probably missed it tonight, but at least you've got all the plan put together so you're ready for trading on your own tomorrow. Are you coming out and joining me tomorrow morning in the trade room? I hope you are. 8 o'clock Eastern time. We're going to get this stuff going tomorrow to finish up what's been a fantastic week in our trade room. What I'll do is I'll put all of the membership links you guys need. I'll put all those details, the description of this YouTube video. I'll put a big button right below this video tonight on the trading blog. So get registered as a new member. I'll see you tomorrow morning at 8 o'clock Eastern time. And don't be afraid to call the office as well. You can always call us here in the office. We're always here to stand by to answer all your questions and help you get registered. Or if you're not ready yet, to help you get the right charts, the right data, the right brokers going so you're ready for trading on later on in the month of July. Don't forget, drop those questions in the comment section. We got live chat on the left. We got live chat on the right. And again, I hope by now you guys have subscribed to our YouTube channel because, as you can see, we're bringing the good stuff every evening on this YouTube video. So once again, thanks for being here. Thanks for tuning in. Thanks for sticking around. I apologize for keeping you waiting here tonight. Hope I made it worth the wait. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.